Hello friends, this is Martin Secrets, John for learning about trading and investing. Welcome to Markets Tomorrow, the daily market analysis show, and this is for November 17th, Wednesday, 2021. If you're not subscribed, please subscribe and share to your friends so that helps everyone. Thank you so much. What kind of market we had today? A slippery one with bears tightening the grips. Let's see what exactly happened. So as usual, this is the pre-market analysis for November 17th, Wednesday, and we would be doing all of this analysis in the chart space and all of this parameters that you see on the left side, and right side you have additional data analysis on different aspects like volatility, open interest, institutional participation, global commodities, and we'll wrap up some actionables for tomorrow. So as usual, we have the chart screenshots here, and price action is what we look at. So Nifty slipped, losing 110 points and forming a wide range bearish candle, losing 18k also, and closed just below that. So this is a wide range bearish candle, a wide range bearish candle on the Nifty and the BANKNIFTY. BANKNIFTY lost 400 points here. Alright, and it slipped from the previous support slightly. Right, otherwise, if you see, it opened up with the gap. It was not a gap down. It dipped first and then sideways and made an attempt to face the resistance upside and then dipped further to the support zone. BANKNIFTY, it didn't opening in straight flat and finally slipped down. Let's see what it's saying. See, this is what happened. Right, slipped, consolidated, and attempted to face resistance and came down. Slipped, consolidated, then just ended down, 400 points down, 110 points down. So that was the market action today. And support resistance, if you see, right now it's at 817, 950 to 18,000 support, and above that you have the resistance 18,100 where it fell down today, and then you have 18,200 where it fell down yesterday. Then above that you have the 18,350 to 400 range, and above that you have 18,600 all-time high. Downside, if it slips from the support of 79.50, then you have the previous swing low of 17,800, and then if that is problem, you have the 18,600, 650, 17,600 levels, right? This is 17,800 levels. So all previous swing lows, right? So there's the supports, good supports down there. Look at BANKNIFTY on the right side. It has almost taken the support 38,500 levels and slipped from there and then bounced back slightly, and then below that you have 38,000, which is the next support level, and which is the previous resistance, and then below that you have 37,800 levels if you slip that, and then you have 37,400 levels below that, right, which seems to be a gap as well, window gap, right? And upside you have the resistance that will face at 39,000 rounding number, which is also near to a Fibonacci retracement 23%, and above that you have 39,500 levels, which is a previous swing low in the previous resistance level, and above that you have 40,000 to 40,200, which is the previous resistance level. And after that you have 41,400 levels, and then you have 41,800 levels. So all previous resistances. These are all resistance on the upside for the BANKNIFTY, and downside we are already seeing. So that's the support resistance levels. Make a note of all of this. This would be very critical for you to do the exits at the right time whenever it is broken or trail up the profits whenever it is moving up. So holding the bands, interesting. You can see that there is a contradiction. So BANKNIFTY on the right side, you can see that it is expanding the volatility, and then the downside seems to be spilling out, right? While Nifty, it's consolidating still, its volatility contraction is happening on an expansion, and it is slipped off from the moving average support. Here it is slipped off long back, and this is very bearish. Not very, it is bearish because already expanding and the price moving at the lower. So one more candle here means it's clearly bearish downtrend, right? Otherwise it may continue to straighten up again sideways. So this support that was closed, that's taken already yesterday, it closed above that support and could not sustain that, it's facing resistance, and now it closed below the moving average support. So moving average support is lost, means there is a there is a concept. So overall Nifty is sideways, and BANKNIFTY actually buying the bands and vertical expansion downside is showing it is bearish slightly. So bearishness has begun at least, right? So more divergence weekly. Momentum reverse divergence bullish is still valid, and it's stopped halfway and then taken a bend, but it's still valid. But daily time frames, you can see that it is Momentum has slipped into the sideways. Momentum has slipped and hovering sideways in Nifty and the Bank Nifty. The Bank Nifty, it may take a support at the 40, RSI 40, and Nifty, it may hover around the sideways. So that's what. So Bank Nifty, some momentum, some more momentum slip can happen until it reaches the 40 RSI, and then it may bounce up, take a support there and bounce up. But Nifty is pure sideways, just like the Bollinger Bands are indicating. Trend indications, yesterday Nifty had crossed over to the bullish zones, but today it crossed back to the bearish zones on the short term daily. Bank Nifty was already in the bearish zones, and interesting thing is you can see that the strength of the ADX, the trend ADX trend has started rising slightly. The weekly also, the Bank Nifty alone has got the strength rising in it. So trend wise, Bank Nifty for some reason is, the ADX indicators are showing that there is some bullishness ahead, although the short-term trend is bearish, right? The strength is better than the strength of the trend in Bank Nifty is better than Nifty, although short-term it is bearish on both. So that's so next one is volatility, and then volatility is interesting. You have an up down 2% kind of move that is happening today. It managed to hold the 15 levels. 15 to 19 is the range that is trying to form. So 15.2 is the levels, and 2% slip is what happened today. Yesterday 2% up happened. Right, so IBB is at 33.2 kind of levels, and IB is 15, maintaining the 15. So we should see whether we can expect a bounce from here towards 19 and again. So, or it may break that range of 15 which it was holding for some time. Opportunity analysis shows that there is very good open interest, change in open interest that you can see that in the graph. Call writing has got added up for the day after tomorrow expiry. Tomorrow is Wednesday. Wednesday is supposed to be volatile. So we can see that there is resistance that is added up. Change in open interest also has added up a lot of calls. So it may be on the downs. It may be it may not be on the upside where the expiry may ending up is what it looks like from the charts. So Nifty 18,000 and 17,800 both have good call writing. Highest is 18,000. So whether it close at 18,000 or below that is question. Now resistance upside is there at 18,100 and 18,200. Highest is 18,200. So put call ratio 0.6 is not bullish. Short bill is what happened with futures data. Bank Nifty 38,500 and 38,000 is what maximum put writing is there. 39,000 is showing bigger huge resistance, and then 38,500 also after that it is showing this huge resistance. So Bank Nifty 39 holding would be the key, and 18,000 holding would be the key and expiry date for the 18th November. Sectoral performance: IT closed green today slightly, and auto closed 2.5 bullish upside. Seems to be a Bollinger Band breakout to the bullish zone. So auto seems to be strong. IT also is picking up. So both numbers are good. Rest is all sideways. Metals 0.5% down sideways. Pharma 1.5% down sideways. FMCG 0.7% down sideways. Reality also slightly down, but to the edge, right? So you can call IT, auto, and probably cautiously reality also. So these three sectors are bullish. Otherwise are all sideways in the momentum base. So you have to wait for that to catch up on the short term. Institutional participation disappointing today. 560 posts again started selling after 2 days of buying, but domestic institution bought. So domestic institution buy is still exceeding the FI buying. So domestic institutions consist mainly mutual funds and PMS funds. So domestic institutions and the retailers are having larger impact as compared to the FI in the current market, because the big sell-offs had happened from the FI side. They're hardly selling much, but they continue selling. That is the concern. Dollar index is hovering, consolidating around the support zone after a drop from the 75 and then seems to be settling at the 74.5 kind of levels. Dollar index, while at the same time is breaking out on the right side, you can see that previous resistance taken out and it's bullish, which is a concern. It can impact at some point at the currency pair USD also, right? If the dollar is strengthening, it's not that great, except for the IT industry. So crude oil has slipped and then slipped below the 80, but again it has climbed the 80. So it may take support at this support zone at 75, 76. That's what we should hope for if that is the case. But anyway, momentum of the rise of the multi-year breakout has slowed down, which is good. Gold is breaking out and then let's touch the major resistance on at 1876, and then we have some resistance out there till 19,017 kind of levels. So we'll see some consolidation there. So you should wait and watch whether this cup and handle part of this channel has already broken out, whether it will take out the next resistance and make another head towards the previous all-time high is the question. So gold is bullish all around. Here also it touched the resistance zone with the green candle. No major movements are seen in the Dow Jones and Nasdaq and the S&P 500. It's all flat, slightly bearish. So we'll have to check before the pre-market to see what happened exactly. If there is a big move, then it should reflect in the SGX first, and then same should reflect in our markets as well. Action levels, there is a bearish setup on the Indian band. It has got a monthly resistance that is seen on the momentum, and it has slipped off the trend line channel, and weekly also the momentum has slipped to the sideways. So there is scope for a short trade on the on a swing, not a portion, probably short trade scope is there for swing trades on the Indian bank. The trend is trending, actually it is within the channel, and then it's weekly. You should wait for the daily candle for a retracement to happen from this channel top and then make an entry, and this can be a good swing trade as well. Trend limited, I believe that is Tata's pretty long. So to wrap up, this is mild bearishness or neutral. That's what the short-term view that I have. The reasons, because the charts are showing momentum has slipped, they need to catch up, and it has also lost the trend. Trend crossover on the ADs has happened. So both indices are facing resistance on the upside multiple days. Bank Nifty charts are weaker, and the Bollinger Bands is showing that a spill out on the lower band is happening. Nifty and Bank Nifty both lost and slipped the 20 moving average support, and FI institutions are again started selling as a concern. And these are the reasons why I am mildly bearish. Why mildly? Why not severely bearish? Is because there is a weekly momentum divergence, and it is charts are settled at a support zone. So there is still scope for a bounce back from the bullish reverse momentum divergence. And the last two paragraphs are repetition, as I said. So this is about the volatility range that is getting formed between 50 and 20. So it's critical to see that whether it will slip from the 15 or not. Right? If it is not, then there is a chance that it is going to spike back to the upside and then hover around between that range. So if it is slipping from 50, then it may be another change of volatility. Another pattern may emerge now. Otherwise, it should benefit from the weather positive strategies. Now, taking counters will also can benefit for the weather spikes, and fly should work at this as long as it is in the 15-20 range, and always don't go for the negative calls, and so use options. Spread strategies like hedge positions, like vertical spreads, or strategies which are hedged like iron fly, that can save the refined risk can save you from having bigger losses when the market reverses or volatility spike. Huge volatility happens. Right? So I hope it helps to understand what happened in the market and also frame your own view for tomorrow. If you liked it, consider hitting the like button and then share it to friends and colleagues. As well, everyone can benefit. And thanks for watching and thank you for your time. Happy trading and happy learning. Bye.